Dropbox stock was trading at $29 per share back then in March 2018 when they first IPO'd. Since then, Dropbox performance has been kinda disappointing. I remember when I was looking at Dropbox stock in December 2018, Dropbox stock was trading at $19. Now zooming straight to 2020, guess what? Dropbox is still trading at $19, and that got a lot of Dropbox investor and non-investor including myself and our Yahoo brother over here to wonder how the heck is Dropbox still trading at the same exact price from 2 years ago at $19 today. Because you would think that investing in Dropbox stock is a no-brainer thanks to the COVID-19 pandemic. And that's not a wrong thinking because we have seen work from home stocks like Atlassian, Slack, Twilio, DocuSign, Zoom absolutely on fire right now. Not to mention, if you look at Dropbox earning report in the past quarter as well as the most recent one, what you will find is an outstanding earnings report that came through as promised. I'm not gonna go too much in depth about the recent earning report since this is not what this video is about. But just know that Dropbox have seen strong, stable increase in operating income, profits, paying subscriber, and free cash flow growth every year, enough to put Dropbox one of the most fundamentally and financially sound in that regard. So let's go ahead and talk about what happened to Dropbox, why did it fail to take advantage of the pandemic, if Dropbox can actually break its $19 curse, and if it's a good idea to buy it right now. First, let's start with Dropbox Competition. For those of you that don't know, Dropbox is one of the biggest names in the cloud storage, but as with any other industry, there are competitors plugging away at its market share. The 4 biggest competitors that pose a serious threat to Dropbox are none other than Google, Amazon, Microsoft, and Apple. When it comes to competing for users, Dropbox finds itself with serious disadvantages. Just imagine, if you are already using an iPhone or other Apple device, you likely already have an iCloud account. And as all Apple customers will know, the company highly encourages users to back up their photos, apps, contact, and all other data in the iCloud. This means that Dropbox not only has to convince customers not to use Apple's convenient and competitively priced services, but it also must convince them that a Dropbox service is meaningfully better. And the same goes for Google, Amazon, and Microsoft as well. That's why Dropbox is still stuck at $19 because investors simply do not see Dropbox with that kind of advantages in their hands. However, with Dropbox seeing momentum across the business with strong operating income, free cash flow, and paying subscriber, by the way, already as many as 15.24 million paying users up to date, there's gonna be some kind of attractive distinction that makes Dropbox still relevant in the market. Something like this is really crucial to understand because what many people are not aware of is that there's much more to Dropbox business than simply being a place to store and share files. The way Dropbox works today is by providing the technology infrastructure and computing platform in the cloud, which was meant to focus on project management and collaborators together at any given time. The whole idea is to make Dropbox inclusive of basically everything relating to a project that people might be working on so that you don't have to jump in and out of a host of apps to see what's going on. That means that you no longer have to open multiple tabs, hop from app to app because all your files, all your apps are organized in one tidy place. In Dropbox, there are a host integrations like Papers, Showcase, Transfer, and HelloSign to a wide range of cross-platform functionality with things like Google Calendar, Microsoft Office, Slack, Zoom meetings, and many more. And all you need is just an internet connection and an electronic device like smartphone or laptop to get going, which in my opinion is perfect for companies and universities with an increasingly need for decentralized workplace across the world. Therefore, what you are really paying for as a Dropbox user is an invaluable technology infrastructure to optimize workflow in addition to Dropbox's traditional cloud storage business model. Now, we have just learned about what happened to Dropbox. That then raises the question, can Dropbox break its $19 curse, and if it's a good idea to buy in right now? So to provide you that answer, I'll tell you exactly what I have found from my research. Now, it's very easy for people to think that there's no correlation between Dropbox and the pandemic based on Dropbox stock performance as we have seen so far, which is a letdown by the way. But the truth is that there is indeed some sort of correlation because just a few days ago, Dropbox actually suffered a pullback from AstraZeneca's coronavirus vaccine data. movers including Zoom, Fastly, DocuSign, Atlassian, and of course Dropbox were on the list. So in order to properly evaluate Dropbox based on the correlation evidence, we need to start looking at the issue of work in post-pandemic situation. Because the reality is that the pandemic has already normalized remote work. And subsequently, does that mean that everything will return to the old way of working after the pandemic is over? Well, according to the Future Forum research, it is found that the majority never want to go back to the old way of working. Only 12% want to return to full-time office work and 72% want a hybrid remote office model moving forward. Given the pros and cons, it's clear that many employees want a mixture of home and office working as companies are learning that we can accomplish most tasks remotely without significant drop in productivity or quality. That's the reason why I see Dropbox as such a big deal, because not only do they have a technology infrastructure, specifically Dropbox Spaces 2.0 that should be widely available in the spring of 2021 to meet the hybrid remote office model demand, but also competitive advantage in the market segment. And so to finally answer the question, yes, I think Dropbox has every opportunity to break its $19 curse. Overall, I feel pretty good about Dropbox because it's one of the most undervalued companies in my opinion. I can definitely see myself accumulating more shares along the way, and as long as Dropbox continue to live up to its growth expectation in the three metrics that I deem as the pillar to this stock, that is revenue, innovation, and paying subscribers, expect analysts' opinion on this stock to liven up for the years to come. That's all I have for this video. Please hit the subscribe button so that this video can reach to a brand new audience. Also remember to subscribe for a new future video if you want to learn and watch more on my elaborated stock research. Till next time.